First Property Group, the AIM-listed property fund manager and investor, has interests in the UK, Poland and Romania. At its most recent results, it saw record profits, record assets under management, and its shares had just hit record highs. With interest in Europe, how's the company preparing for life outside the EU? Well, Ben Habib is chief executive. He joins us now. Ben, welcome.
Yeah, morning.
I want to get more on Brexit in just a minute, but I want to talk first of all about these record profits and record assets under management. I mean, you're an investor and you're also now a fund manager as well. Explain how the business is motoring and what you're doing in terms of preparing good results for shareholders.
Yeah, well, the two principal areas in which we're investing at the moment are offices in the United Kingdom and then the ad hoc opportunistic purchase of property in Poland. Those are our sort of main focuses. In the UK, we raised a £180 million fund last July to invest in offices. The principle being to buy offices where rents are likely to rise or there's an opportunity to convert the offices into residential use using the permitted development rights legislation that came in 2013. And we think that should yield good profits for investors and therefore for us as we go forward. And then the other big bit of news really, which is a key part of why the share price went up 10 days ago and reached an all-time high this morning, is a property we bought in Krakow, which is a Krakow business park, 50,000 square metre office park, where I think we could add a lot of value fairly quickly and make good returns for our shareholders.
Yeah. Let's take a look at the UK first of all and break this down a little bit with this fund, the money you raised last year. You've not invested all that yet, have you? But you're talking about business, primarily business investment. Whereabouts and what sort of returns you expected to get?
Well, we're targeting the southeast of England pretty much. We have the right to buy anywhere in England, but you need to buy in a place where resi values are reasonably robust, otherwise you don't get the ability to convert the offices to residential. So we're really targeting the south of England, southeast of England, and our offices are based in Boreham Wood. We've got a large office block in Boreham Wood, Hook, and near Uxbridge. Those are the three areas that we've got properties.
You're looking to expand that interest? You're going to raise more money? You're going to increase your
We're
exposure?
going to gear the fund. We've invested about 120 of the 180, so we've got 60 million of equity left to invest. But we're going to gear the fund a bit, which will give us further buying power. And I think in total, once we're fully geared, we'll have about 140 more million to invest.
That means borrowing money. Borrowing money means you're going to pay interest. Bank of England, as of the recent estimates, potentially has the capacity possibly to move interest rates up. How's that going to affect the business then?
Well, the yield gap, as we call it, the gap between the cost of funding and the yields at which we can invest is still massive. Right. So we're raising a loan at the moment against our Boreham Wood property, and our all-in borrowing cost for Boreham Wood around 2%, and our purchase price was on a yield of around 6.5%. So there's a big pickup. Between the cost of borrowing and investment yields, and we can fix our interest rate. And frankly, the Bank of England's been banging on about raising interest rates ever since Mark Carney took over in 2013, and he's yet to do it. So I'll believe it when I see it, and to the extent that they raise them, I don't think it'll be much.
Yeah. How about Poland as well? It's in the EU, of course. We'll get on to the EU and the relationship with the UK in just a minute. But in terms of Poland, it of course has its own local currency as opposed to the euro.
Yeah.
Why Poland? What is it you like about Poland?
Well, we've been investors in Poland since 2005, and we went there really for a handful of reasons. One, they just joined the European Union back then, so it was obvious that they were going to get a whole load of EU structural funds flowing into the country, together with all the FDI that follows. Their economy is robust. They've got a balanced economy. It's the largest economy in Central and Eastern Europe. Good sized population, 38 million, very well educated, very hard working, as we all know in the United Kingdom. So just a great place to invest, and we've had a very good run there. And
what are the returns like compared to what you're experiencing here in the UK?
Well, phenomenal. Just to evidence the returns, First Property Group's NAV has grown by 26% per annum every year since 2007. So that's taking our measurement from the peak of the boom, not from the trough of the crunch. And that's largely down to returns we've made in Poland. And it's a reflection of how well Poland has traded compared to the rest of Europe.
Can that continue?
I think there is a structural shift going on. We all talked about convergence. You might recall, Jeremy, back in 2004, 2005, the big story about Central Europe was convergence, and that kind of went off the agenda when the credit crunch hit. But that's what's taking place. Convergence is taking place. So Businesses are moving across from the United Kingdom, Western Europe to Poland. Wages in Poland are rising. Consumer spending is rising. It's a very healthy shift for the Poles. They've got all this EU structural funding going in as well. So I think it will continue. I think it will continue until wages come up to Western European levels.
As a company, you've also got a history as well in Romania, haven't you?
Yeah.
How important is that now?
Well, it's a very small part of our portfolio, and we will look to do deals in Romania, but they have what I think can only be described pleasantly as an interesting political landscape. And, so we've got some question marks over what's going on in Romania at the moment.
Yeah. Let's take a look at Europe and the risks at the moment. Like the UK, there's some within the ECB that want to start raising interest rates. I said Poland is outside the euro, but it is nonetheless in the EU, and it's in the core of the EU,
Absolutely.
I think, certainly of the Far East. How vulnerable do you feel being here in the UK as operating businesses in Poland?
I feel entirely comfortable. Notwithstanding all the noise that comes out of the European Union over negotiations for our exit deal and so on, I just believe pragmatism will prevail. The United Kingdom is the biggest buyer of European Union goods in the world. I think perhaps pipped by the US, but very, very significant buyer, and pragmatism has to prevail. And
is there a currency risk here with the sterling potential strength against the weakness of the zloty?
Well, what's happened so far, at least since the referendum for Brexit, is sterling weakening. So we've seen an uplift in all of the value of our assets and the income streams on them. The zloty follows the euro very closely. It's not a member of the European Union, of the euro, as you mentioned, but it sort of tracks the euro closely. So as the euro has strengthened against sterling, it's been terrific for First Property Group.
Yeah. What about the political risks, though? As indeed, of course, there are now perhaps maybe heightened political risk in the EU because of what's happened in Italy recently. We've got some uncertainties about the German government and so forth.
Yeah.
Is that something that keeps you awake at night?
It isn't, to be frank, Jeremy. I mean, I think that one can...
You're not in Italy, of course. I'm not suggesting you are, or in Spain or anything like that.
No, but it'll have knock-on effects,
course,
absolutely. And again, these are kind of extreme potential outcomes which are so hard for a CEO of a company to factor into one's day-to-day decisions. So I'm kind of ignoring what's going on in Italy and Germany and just assuming a level playing field in that respect going forward.
We did talk to you around about the time of the referendum, and at that point you did say that you felt that should we end up outside the EU, I think at that point it was still a big question. Here we are now within this period of preparing ourselves for life outside. You were talking then about potential opportunities.
Yeah.
Just remind us what those opportunities are for the UK outside the EU.
Yeah, I mean, I think it's really good question that, because that was the basis on which I believed in Brexit. I still believe in Brexit, but that question has been singularly failed to be answered by the government. Everyone's focused on the deal with Europe, but no one is looking at the opportunities available to the United Kingdom. Liam Fox, for example, is completely quiet on the subject. Where is Liam Fox? Can we put a call out to establish where he is? Because he should be trotting around the globe, glad-handing all the ministers of finance and ministers of trade from other countries, all these ex-Commonwealth countries who have been crying out apparently to do business with us. He should be there striking deals. If he isn't able to sign them because we're still a member of the European Union, fine. But he should certainly be getting deals moving, and I see nothing of that. I see nothing out of the government about how it's going to keep the city competitive. Everyone frets about the response from Europe, and Europe somehow kicking the city in the shins. But actually, what are we doing? What are we doing to protect the city? Forget about Europe. What are we doing to protect the city? What are we doing unshackled with the burdens of European Union regulations? What are we doing to support our industries in the north of England? What are we doing to reinvent Great Britain? Where is the positive story?
The US ambassador has just said, actually, just along those lines, why is British so pessimistic about this? What he saw as an opportunity, as indeed do you too. What is your plan if and when we do actually finally sever all links? Do you see yourselves freer to invest in India or Canada or Australia, or will you just stay within Europe?
No, we'll stay where we are. Property is a very local business. You need to understand the markets deeply. So we'll stay where we are, continue to do what we're doing. We're in countries which are performing well, and I think the United Kingdom's future is bright. We're investing here, and I think it's fine. Everyone needs to stop fretting, and as the US ambassador said, get a bit of self-confidence and move forward.
Yeah. Let's take a look at the share price. First Property Group record highs actually today, 62 pence a share, just a pip or two away from that. You're a what, 15% shareholder in the company?
15%,
So you have a lot of skin in the game, as they would say. What are you telling investors about this? Is there more upside to go? Do you see your stock improving as time goes on with the likes of this deal you just done recently in Krakow?
Yeah, well, that deal is a very important deal for First Property Group. We bought a 50,000 square metre business park in Krakow for effectively 50 million euros when you take the bank debt into account. And we've just refinanced the debt and we've raised 33 million euros of equity, which gets us in at an overall cost of 83 million when you add it all up together. But the exit could be well north of 100. In fact, should be well north of 100. And so we've got big hopes for that property.
A dividend, you're already a dividend payer, of course. Yielding what, 3%?
2.5% now with the share price gone up. Yeah.
Right. What's your dividend strategy? Do you see that lifting on the back of this higher share price?
Absolutely. Our principal mantra on our investment side is to buy properties which are high yielding with sustainable income streams. And that policy follows through all the way to our dividend policy, which is to pay out dividends to shareholders as and when profits rise, as and when we can increase dividends. We don't want to be imprudent in the way that we raise dividends. But if you look at our dividend history over the credit crunch, actually we've either held or increased our dividend every year through the credit crunch, which is a remarkable position for a leveraged property investor. You know, if you look at most property investors during the credit crunch, they've had to do rights issues to survive. But actually, we've been paying an increasing dividend. So that will continue to flow through. As we make money, we will pay more divvies.
So what is it that keeps you awake at night, if indeed you do have broken night's sleep? I hope you don't. But I mean, if you were to say, in all honesty, the sort of things that concern you as a business, what is it at this level of property prices, at this level of interest rates, whatever it is, that concerns you?
There aren't many macro issues that are concerning me at the moment. If I felt concerned about a macro issue, we would change course. If you look at the history of First Property Group, you'll see that we've changed course a number of times as the macro situations have changed. So we got out of the UK, we went to Poland, we came back to the UK. We used to buy income-yielding properties in the UK, then we bought vacant offices when permitted development rights legislation came in. So we chop and change depending on how we see the environment. Actually, the environment, I think, is pretty good at the moment. Interest rates are at record lows. Yes, they're going to rise, but by not a lot. The governor of the Bank of England couldn't afford to increase them too much. So I think that yield gap for commercial property will be sustained. Institutions are sitting on their hands at the moment, so it makes it quite interesting for a company which is cashed up like as we are to go out and buy office blocks while institutions are sitting on the sidelines. So I'm not worried really at a macro level. The things that keep me up at night are deal-oriented. You know, we're a deal-orientated business, so it's about.
You're not getting enough of them.
Yeah, we're not getting. Well, we're not. You know, how much money can we make out of the deals we're doing, and are we going to do new deals, and what kind of deals are they, and should we be buying this property or that property? You know, just mundane day-to-day stuff.
Good. Look, it's a pleasure to talk to you. Thanks indeed for coming in to talk a little bit about your business and also business potentially outside the EU for a UK company. That's Ben Habib, the Chief Executive Officer of First Property.